What I'm looking at right now too is gold. I would like to see it come down, but if we get a 50 basis point cut, I can't imagine why gold would be coming down. But if we do get a retracement, I'd like to buy gold at either of these levels right here. So 25.30 and 24.70. These are just two previously broken support zones, and the past few days have risen above this channel. I like that as a good technical spot, but we'll have to see because we get that 50 basis point cut. I think the markets might take off, gold might take off. And then later on, either the rest of this week or next week, they might be assessing how bullish a 50 point cut is going to be.
Right.
So I think maybe what we could see is an initial spike could last 30 minutes, an hour, or whatever, or it could last for the rest of the week. And then following that, I think maybe in the next few days or next week, they start assessing, okay, well, the Fed had to step in pretty aggressively. They had to cut more than they had projected at the beginning of the year because jobs market is slowing down. Inflation is at like 2.5%, which is good, but they had to step in and be more aggressive, and that might not be a very bullish sign. So I think probably today, I don't want to jinx anything, but I think we could be going to a bullish market, at least initially. But again, I see limited upside. We're at all-time highs almost on the S&P. And if we break those, I'm not sure how much higher we're gonna get from there. That's just where I'm standing right now.
Yeah, I agree. I mean, if I drag a fib from high to low, I mean, we could pull back to this 127. We could have like a one. I mean, that's 580. 580 could then fade and fall. We could still. I mean, there's all sorts of ways I can draw this stuff, man. I mean, if we somehow get to 580, but then we pull back into maybe this low. I mean, there's all sorts of volatility. Like maybe we have something like that, Frank, where it actually like connect the dots, blow off the top a little bit, get to 580, but fail to get to 600, and we turn back in and we have like another sharp support level test. I think the reality is the cut's finally here. We're just going to figure out in 3 minutes here, is it 25 or 50 basis points, assess price reaction, and then the market's essentially just going to wait. Like what happens to the next level of employment data? What happens to the next round of inflation news? All this matters because the only thing we have from the Fed from now until November 7th is going to be an FOMC minutes release. There's nothing else from the Fed. So this is why I said earlier in the week that I could see a 50 basis points cut justified because they're looking to say it's appropriate to change policy. We're going to do it. We're going to start a little bit more aggressive so we can, soften any type of labor news or blah. I don't know, whatever Powell wants to say, however he wants to say it. But I think it gives them, in the absence of actual Fed talk, it gives them the ability to say, okay, well, if job numbers come in as expected or slightly softer or slightly better, they've already cut 50 basis points. So rather than thinking in the next 30 days that the Fed is absolutely behind, they can get ahead of it now and say, here's 50 basis points for you. Chew on that. We'll be back in November and we'll assess whether to do another 25, another 50. And then 25 for the end of the year still gets us up to 1%. 25 and 50 by the end of the year still gets us to 125. It's like there's still anywhere between 0.75 to 1.25 to 1.5% cuts on the table before the end of the year. That's a really aggressive Fed. And what's going to be tricky about their language is it doesn't necessarily mean that they're dovish. It just means that they're trying to say we're going to be less restrictive. We've waited long enough. It's time to shift. We think it's appropriate, blah, 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 blah. So there's a very crafty way they can say it today. And again, price action is going to sniff it all out and we'll figure out what to do. So, yeah, but there's a lot of ways to draw it up.
Another thing to look out for today, at least, or the rest of this week. So, yeah, they can cut now by an aggressive amount and then they can wait, I guess, in their next meeting in November, see where things are at. Like if the jobs market is steadied, maybe they'll pause. But, if we go 50, is that to say that we're going to be in consecutive rate cuts going forward or what? And that's definitely a question. But at the end of this week too, we have triple witching, I believe, which is like
Friday. Yep.
in the options market. So Friday we have that. That's something to consider as well.
And end of month and a quarter on
At
Monday.
these highs, on what?
The end of month, end of quarter. Friday is triple witching with it's the index expirations, index futures expirations, and stock expirations all Friday the 20th. And then the following week we have the 27th and 30th, which will be like end of month, end of quarter. So we got a couple more weeks of pretty decent volatility when it comes to order flows and options. All right, dude. News is in. I'm getting a lot of choppy price action here. Initial reaction is price going higher on the S&P. I'm imagining that we've got a 50 basis points cut. Somebody report the news. Yep, Garrett says 50 basis points. Okay, so we just cut 5.5%. Again, could be very noisy. Obviously, you can see that orders have been waiting all day, and you've got some big fingers on the buy and sell button. Keep an eye on things. So I do have limits in on my SPY order, by the way. That 155 debit, I put in a 350 credit. I'm trying to get closed out if we hit 569, 570 today. Let me take a look and see how that's trading right now in real time. Right now, I'm up about $100. So if I look to close, it's trading about 2 and change, 250. I'll keep an eye on this one. I've got it set to 350. And we should roughly get there. If we hit 569, 570, we should be getting close to that. If we look at the options chain, yeah, I'm showing a $3 bid right now, or $3 ask rather, for the 569. If we push up towards 569, 570, now we're above $3, 308. So I'm up about a 40-cent debit. The heck was that? That was a credit spread. I'm up to 322, 325. All right, I'm going to move the stop loss on that long call. Let's get up to 570 today. Come on.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
I'm up over 100% on that SPY long call. Okay, I'm going to move stop losses at least. Let me see that gamma squeeze. We're right there. Come on, baby. Go tag some 570 for me. You freaking turd. All right, I'm going to keep an eye on that one, dude. I don't want to see this fade. I want to see if this will keep pushing. All right, so chart alarm's going off.
Yeah, the initial reaction.
Yep, it's okay.
It's probably not telling us much.
This is why I also did the expiration out to Friday, because we can obviously have a lot of noise. Look, this move could do this for the next couple minutes. This is a 5-minute time frame. We could go up here with this large, it's trying to go higher, but the next candle could be a fade. It could be really, really choppy today. I'm just watching, but you can tell that all the order flow is waiting for literally 2 p.m. I mean, this market didn't do anything all day. By the way, if I have anybody that's with me in my daily profit play this morning, it still wasn't hitting our profit target in full 15% by the time we rolled into FOMC today. It was still trading like $5 bid, 5.10, 5.15 mid. Crazy. Like, it just took all day. And I mean, we were out of the trade in the first 30 minutes, but we just took partial profit. So, okay, I've got the SPX hitting 5.669. All right, keep an eye on this one. There we go. So, and the reason I'm not adjusting the stop loss right now is because I do think there's enough volatility that I could get this thing stopped out at $1.55, at $1.60. So I don't want to move the stop loss, because I could get tagged at the stop, and then if we go up and retest today's high, or we hit 570, that is still the gamma squeeze I'm watching. So that's why I put in the 569, so I can tap that level and try to get that full profit. That was close, man. I saw it trading up to around 325, but now it's $1 off. So I'll just keep an eye on it. So let's look at the tail of the tape. Says this. I mean, we did have FOMC minutes. You seeing any headlines? Here we go. So the actual was 0.5%. So they did cut. The official rate is now 4.75. Let's see here. Came in below. So it's crazy that the calendars never changed. The calendars all said 5.25. They came in 0.5 actual. The median view of the Fed funds rate out to the end of 2025 is 3.4, which the previous says 4.1. The CME watch tool, the futures market is pricing in way more cuts than that. But I want to see what the dot plot reads. Fed funds rate at the end of 2026, 2.9. Gain greater confidence in inflation moving sustainably towards 2%. That's all BS. There's no way we're coming back to 2%. There's no way. We're going to operate in a 2 to 3% landscape. No, I think we're going to operate in a 2 to 3% landscape for a while. I think the Fed is willing to burn the economy hotter, get this last bit of growth, kick this out there until inflation does become really stubborn and they can't get it much lower than 2.4, 2.3. I don't think we're coming sub 2% anytime soon. And honestly, if we're increasing money supply and we're cutting rates, it's not as restrictive. And so I just think inflation gets a little stickier. But anyway, that's for another conversation. Let's see, PCE inflation end of the year, 2.3 versus 2.6. So they're looking at inflation projections being softer, which is good. 4.4 unemployment rate at the end of 2024 versus 4.2 now. So they're looking at a slight uptick in unemployment. We'll see if the market, doesn't like that. 2% GDP growth versus 2.1. So that's an upward revision of GDP. U.S. futures price in a rate of 64% chance of 25 base hits in November. Here's your dot plot. Let me take a screenshot of this. Okay, so we have consensus. Let's see. If we're going out to the longer run, there's a bit of variance between 3.5 and 2.5. So what we'd like to see in the dot plot is we want to see like one big horizontal line that all the Fed is kind of at the same level. So right now, I mean, the longer run, somewhere between 2.5 and 3.5, but into 2024, you're looking at the Fed settling between 4 and 5%. But most of them are sitting around 4.25 to 4.5. And right now they just cut the official rate. Let me change the color here. The official rate is 4.75 as of today. And so that looks like there's 1 to 2 more cuts, either another 25, and maybe it's 25 November, and then maybe another 25 in December, Frank. That would get us into where this dot plot sits around 4.25, and it's probably going to sit around like 4.3, 4.6, something like that. It's going to be some type in between number. But most of them see that we're going to be lower. So the majority of Fed speakers right now, Fed members, are going lower. So I would imagine that November, December, still looking for another 25 basis points each, if not having one possibly at 50 basis points. So we'll see, man. But 50 basis points is in. What do you think?
What do you think your plan would be for the rest of the week? Because now we're seeing some high IV and even into the 5,700s on the S&P for tomorrow. Mm-hmm. I'm looking at, let's see, 5720, which is pretty far off, giving us a $1.40 credit.
Show your screen. So if I see IVX, screen, right? Yeah, go ahead. If I see IVX higher, I might not do a lot of day trading, especially if I'm selling options. I don't know. Like today was literally exactly what I wanted to see price action wise, and I got a fraction of the time decay that I usually get. So if we have another like IVX tomorrow that's high and a move that's going to be like 55 to 60 points on the SPX, I might just stay out of the market tomorrow. But I've got positions out to the 20th, the 27th, and the 4th, and the 30th. Like for the next couple weeks, I think I'm fine. And really, it's just I'm going to go ahead and comb through my portfolio. Can I make any changes? Can I make any updates? I take some profit, manage, redeploy? I'm probably just not doing a bunch of crazy short-term stuff when I think it's potentially a lot of noise. So that's my plan. Is like I just don't want to get overexposed, man. If I'm wrong, I'm wrong. But at least right now we've got some price action that's, I mean, in 5 minutes we just went from 562 to 568. That's a $6 move in the SPY. The SPX probably jumped up. Let's go to, that's a lot of noise. SPX right here. I mean, just in 5 minutes, this candle jumped up 53 points in 5 minutes, and it's right back where it started. So I just think it's going to be a noisy day. We're going to have to let price do what it does best, which is hopefully give us some movement. Now, remember, Powell comes to the podium in around 22 minutes. He's going to start talking. I'm not trading what he says. I just want to see what does price do based on maybe a phrase, maybe something with Q&A. I don't know, but I look at it this way: an easy trade for today, and not necessarily today, but like for the rest of the week, is if we have a big indecision candle, if we just take this low and this high, the Fed might do this for the rest of the day, Frank. It might be just really choppy. We've had several FOMCs where this is exactly what happens, where if you see price come down and test and that rips back up here, comes to the highs and rips back here, what that does is that kills every trader that's trying to go directionally, right? And if you're trying to sell, like, are you, by the way, are you in that trade? Are you in that trade that you showed me earlier, like looking for that thing to pin? Are you in that trade?
No, I didn't take it.
Okay.
I wasn't sure. I thought we would get a lot of noise and we get good volatility, so we could have a lot of IV, and there would be good credit on selling that iron condor. But because I felt like a cut would probably make it move more than pausing.
Mm-hmm.
That's what kind of kept me from taking that trade. But we haven't really moved that much. We're still kind of in that range. I kind of want to look at it again and see what the IV or what the credit's going to be for that.
Sure.
Because there's a chance that we do end up here by the end of the day before we fully digest everything and then make more moves tomorrow, I guess.
Okay. Well, before you start calling tops on the SPX today, let me take a look and see if there's any levels that I should be mindful of. So I've still got the 570 gamma level. This actually has increased in net size, so it went from 1800 this morning up to 2246. This just gives me a little bit more conviction for that trade. Again, I'm not trading it for a 0 DTE. I'm looking to see, can we hit that level by tomorrow? Yes, no, maybe, but that's my trade. And then let me go to SPX here and see if there's any levels to the upside on SPX. So SPX, I've got gamma levels up towards, I just saw that one disappear. We kind of wicked through those levels. You're seeing these move around a lot in real time. So this is a lot of noise. We're getting all sorts of movements from the 5650 area to the 5675 area. If I start to see that these histograms change where my blue, I want to see the blue fill up. I'll use a different color. If I get the blues to fill up to the upside, then most likely that's going to be enough to help drag price higher. If all of a sudden I see my pinks that are filling up to the downside, then obviously that's a greater pull to the downside. So I'm just gonna let this just marinate for a second. Powell's coming in a few minutes here for the press conference. We're quickly fading the news candle right now, which it's fine. Is this a buy the rumor, sell the news? Maybe, but the day is not done. And look, don't be surprised if today the market gives us a low and a high, and intraday trading is just tight, right? Like we come down and test and then come back up. We come back and test and we go back down. Like I could see a lot of whipsaw price action today. So just be careful out there. I don't think this is anything you need to chase. I think this is something just to sit back and watch, and then just monitor everything, right? Okay.
Yeah. Especially if we come back to break even, I'm not sure what to assess for that. That might mean that, so if we come back, close around 5640 on the S&P. So basically where it opened up at, after the Fed rate decision, after the statement, so Powell's going to talk about like what he thinks is going on, and
yep.
I guess sort of address the confidence he has in this sort of thing. I feel like he's going to be indifferent again. He's going to sound kind of hawkish, as in like he's going to be very cautious. He's going to be like, we're not out of the woods yet, something very obvious. And he'll probably say something like, we'll cut when we feel like we need to cut again. So that could be a pause next time, whatever.
Mm-hmm.
And the market may be swinging a lot during this talk, and then might come back to break even and give them like a day or two to understand and interpret what he said for tomorrow and Friday's move. So
Yep.
I kind of think that we could end up at break even or close to it today.
Yeah, I think the market's going to be, I mean, from what I'm seeing right now is we had the knee-jerk reaction, we fade that entire move, and now we see where the real trading is, right? Now it's right back to square one.
Mm-hmm.
Now we see if the market's willing to actually break and go somewhere, and maybe it does, maybe it doesn't, but I wouldn't be surprised if there's some manipulation here, then it pulls back and it comes right back in the middle, okay? Pulls back up here, test the, I mean, honestly, here's what I will say. If we get another rip to the upside, my 569 call that traded for like 325, I might move it down and try to just trap it. I mean, I want to hit 350. That's my take profit right now. I calculated this morning a 335, and I don't know if I would have been filled on that or not because I saw it trade bid at or ask at 325. But either way, like if we come back up to these highs again, I'm probably just going to take the profit. That's over 100% of the position. So I'll keep an eye on that one. But I'm just watching this on the 1 minute chart. For me, if I've got popcorn, I'm watching it right now. This is where the real trading begins. So Powell's coming to the podium about 15 minutes. I'm still just gonna look at real-time news. If Chandler plays the stream over and we can sit here and talk through it, I'm just gonna sit and listen. But I want to watch price. Obviously, that's always gonna be my my plan.
Yeah.
All right.
So when is he coming on? 15 minutes from now.
15 minutes. I want to see if. Well, so I'm going to keep this 1 minute chart up to see intraday stuff on the SPX. I'll come back to this. I'll glance at this every couple of minutes. And actually, you know what I'm going to do? Let me do this. I'm going to quickly shift over. So my 350 credit, I'm going to go ahead and set this with a replace to 325. I'll go 325, and that way I should be able to get out of the trade. And I'm going to keep mine a little bit more open-ended. So for my managed accounts, I'm going to try to get this at 325. And that way those can get taken out for profit. I'm going to keep mine open and see if I can just manage the stop loss into maybe, $3.50 to $4 credits. So that's the one thing I'd like to make an adjustment on really quickly. I just took profit on the 565 by 564. That hit profit. Okay, good. All right, so let me replace this down to 325. Okay. All right, a couple more. 325. And so if anybody has my alert in the Discord, I'm changing that limit to a 325 credit right now. Okay, a couple more here. And had I gone to break even, I would have been stopped out at break even. So that's why I'm keeping it alive. And that's also why I didn't do a 0 DT today, because that it's just crazy how fast that premium changes. All right, 325. There we go. And what would be really nice is if somehow I didn't get hit for profit today, but we gapped up tomorrow and we opened up and I get closed above my limit. So I put in a credit at 325, but we open at 375 or 4. We get the immediate bid and I get some positive slippage with a gap higher tomorrow. That'd be pretty ideal. So anyway, we'll see what happens. All right, so that is all of these. I'm going to keep this one in at 350, but I'll make a quick adjustment if needed. So I'm gonna keep this one up to potentially replace and put in a stop loss. So I'll keep that one ready. We're just kind of jumping around between that high and low. Keep an eye on this one. Powell's coming in 13 minutes. I do want to see this, Frank. If I refresh the CME watch tool, I want to see if any of these numbers changed. So now, and this might take a second to refresh, this Fed chart's probably getting watched like crazy.
57. Mine was 57%, 50 basis points. And then 43%, 25.
Yeah, it
so
came.
This
so
might
it
have been
came.
The
it was
first
65.
Time they were wrong, right?
No, it was right. It had the higher percentage at 50 basis points. It was correct. It was 65% yesterday, 65% probability yesterday that dropped down to like 57 or 53 today, but it was still favoring that 50 basis points. So technically it's still correct, but it was definitely more of a coin flip today than I was expecting. So, all right, this Fed watch tool hopefully is loading. Come on. I'm not getting the refresh. That's all right. I'll keep an eye on this one. Price action wise, again, let's see if we can come back and retest the high. I might as well just set a chart alarm up here. That's a 5. I'll just set I've got the chart alarms on the SPY already, so I'm going to move this one down slightly, see if we can tap that high again. And then SPX, just good price action. I mean, if you're a price action trader, this is pretty darn good. I mean, for anybody that's going short term, you get in there, tight stop, you're already at break even. You got about 5 or 6 minutes of price going your way. I mean, it's short term stuff, but believe me, there's some 1 minute big pockets out there that are trading that type of stuff, and this is, you know, kind of price action 101. So something to keep an eye on. But I'd like to see if we tap the highs again, but I think we're going to be noisy within this. You know, maybe Powell can, and again, watch for those fake outs, right? Everyone gets all excited. You know, think how many people like are dumb enough to buy up here, and then they buy and then they get reversed. Think how many people are dumb enough to sell here and then they get reversed. So if it's going to be noisy, there's going to be some like slightly higher highs or slightly lower lows, but those could be traps. So just be careful. These are 5-minute candles, 5-minute candles, like super choppy on everything. So futures is hard to trade. There's no trend. Price action here in this, it's just garbage. So not bad, but you know, no real direction. So I say tomorrow's a new day. I hope that my 569, 570 levels get hit. Those are the big gamma levels, but I did see about 500 net disappear out of that 2,500 current net position. So it does show there's been some dumping on the high side. So I think there's probably a little bit of a reducing exposure at this time. So
yeah, I think that my final thought is if we close close to break even, that will help reaffirm my idea of limited upside. I'll probably look to continue to sell calls or credit spreads above price, depending on where it goes tomorrow. Maybe take some credit spreads, you know, above the all-time highs. And then I have my VIX plays for October 2nd.
Okay.
So yeah, we'll see. But I'm not really seeing a whole lot of bullishness, and obviously I can be very wrong about that. But we'll have to see where it closes today, and then if it's kind of break even, I'm probably going to be less bullish and more so on the short leaning side. But that's all I got. And, and gold. I think gold is going to be
highs today.
Yeah, it's going to be an easy winner if we can get a pullback on it. I want to pick up some of GLD, but yeah, regardless where the economy is like not as bad as we thought or whatever, we're still devaluing the dollar. Gold trades directly against it. I think gold is a good long play for Q4 and possibly all of 2025. So
yep,
those are my thoughts.
I like it, dude.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.